Welcome to the weekly trading signals. I'd like to start the session by giving you some information about me. My name is Ehab Jubail. I was born and raised in Egypt. I have a passion for financial trading as well as teaching. I have been trading for a number of years, mainly on Forex and commodities. And in recent years, I have also set up my own trading robots, signals, and website. I host online webinars and seminars on investment and financial trading regularly, and I provide my service to subscribers worldwide. Now let's start the session. There will be a number of tradable economic news that we will be looking at this week. Tomorrow at 12:30 p.m. London time, U.S. core retail sales. Wednesday at 12:30 p.m. U.S. core CPI. At 6 U.S. FOMC interest rate. At 9:45 p.m. New Zealand quarterly GDP. Thursday at 12:30 a.m. Australian employment change. At 12 p.m. UK Bank of England interest rate. On Friday at 12:30 p.m. Canada core CPI, and at the same time it will also be released to core retail sales. Last week we had 3 tradable signals. I will revise them with you before talking about this week signals. We had Canada interest rate released on March 9. It's forecasted at 0.5%. My recommendation was to make rise option at 0.75% and fall option at 0.25%. If we don't have a change or the change as interest rate remained at 0.5%, we should just follow the pre-news trend. And that's what's happened. The actual release was the same, 0.5%. And according to my recommendation, the market should follow the pre-news trend. And in this case, we can say the market was at resistant line, and the market just fell down and kept going downwards. The news was released at the point where you can see this blue arrow. So if you place the trade recommended, it would have been a win trade. Second news for last week was interest rate from New Zealand, forecast at 2.5%, and the actual release was 2.25%. So my recommendation in this case, as you can see, is fall option at 2.25%. In this case, we should make a fall option after decent retracement. So at the point where you can see the blue arrow, it was retracement, and the market kept going downwards. So if you place the trade, it would have been another win trade. And here Canada employment change also between 35,000 and minus 14,000. We should just follow the pre-news trend. If it hits these two numbers above 35,000 or below 14,000, we should go in the direction of the news release. We did not, our deviation number is not hit, so we should follow the pre-news market trend downwards. So it would have been another win trade. Now with the first event, we will be looking at this week. US core retail sales that will be released on 15th of March. US core retail sales is usually a good market mover, and considering recent non-farm payroll report, surprising to the upside. I would not be surprised to see a better than expected release. It's forecasted at minus 0.2%. Previous release was 0.1%. The plan to trade this release is straightforward. We are going to wait for 0.3% release or better to make rise option for the dollar, or a minus 0.7% or worse to make full option on the dollar. If we get an in-between release, we will need to look at the pre-release market condition and sentiment in order to make a decision. We will trade this news release using after news retracement method. I will pay attention to both headline and core retail sales figures, but my focus will be on the core figure. And remember to use the recommended pair, dollar, yen, or to verify the pairs that you will trade in 1 minute before the release. So we'll make rise option at 0.3% or more, and full option at minus 0.7% or less. In between release means you will simply follow the pre-release market condition and sentiment as I described in last week news. US core CPI, Consumer Price Index, will be released on March 16. It's expected to rise to around the 0.2%, and with Federal on the verge of another rate hike plus crude prices stabilizing, I would not be surprised to see better releases. It's forecasted at 0.2%, previous release at 0.3%. Our minimum tradable deviation for this release is 0.2%. If the release number, the core number, decreases to a minimum 0%, then we will make full option on the dollar, and if the core release is 0.4%, we will make rise option on the dollar. We are going to focus on the core figure or CPI, except food and energy, not the headline. The headline CPI. So we'll trade only core CPI. We'll be trading this release using our after news retracement trading method. And as usual, if we don't get deviation number, expect the market to follow the pre-release, the pre-news release trend. US FOMC interest rate that will be released on March 16. Um, and this rate decision is likely the main focus of the week, and with market calling for more rate hike by the Federal before year end, this release is unlikely to surprise, but with recent CPI and non-farm payroll releases, anything is possible, so we should watch this news definitely. It's forecasted at 0.5%, like previous release 0.5%. How to trade this news? Considering all the facts at hand, I expect to see no further policy action. However, market could react to other factors, such as if the Federal would decide to keep policy change open in June or beyond. This means we should pay attention to everything said during the press conference and the FOMC statement, as the entire market will also be watching this event and the press conference. What are the scenarios? We have three potential scenarios. If federals hike during that meeting, the interest rate up, so US dollar will gain across the board. I would make rise option on dollar yen immediately. If federals talk about policy adjustment in June, means hike, we should see plenty of demand for the dollar, and and we should, or I recommend to make rise option on the dollar yen and fall option on euro dollar and Australian dollar for us, and you can make it with long-term expiry. If federals are concerned over the economy and want to wait, and this is the third scenario, to wait and see, we should see selling pressure on the dollar. I would focus on going long both in euro dollar and Australian dollar. So first scenario is hike rates. So definitely it will be rise option on the dollar. If federals talk about policy adjustment in June, it will still be rise option on dollar yen and full options on euro dollar and Australian dollar. Last scenario is if federals are concerned over the economy and wants to wait and see, we should make full option on the US dollar. New Zealand GDP will be released on 16th of March. New Zealand GDP is quarterly release, and usually there is a higher potential for surprise. If we get a surprise release, I would follow the trade plan that I will tell you soon. First, it's expected at 0.7%. Previous release was 0.9%. The expected number is 0.7%. And the deviation that we look for is 0.3%. So in the event that our deviation number or the difference between the actual release and the forecasted release is hit, we should see market moves in the direction of the number. So we will look to make rise option on the New Zealand dollar if the release is at 1% or better, and you will make full option on the New Zealand dollar at 0.4% or worse. In the event that we don't get our deviation, we will look for the pre-news trend, and we will just follow this trend. As usual, we will trade this news using after news retracement method. Australian employment change that will be released on March 17. Australian employment change release will be an important release for the Australian dollar, but I would not expect a trend change after this news. I would only focus on the 2 hours after the news as expiry for my trade. It's forecasted at 11,600. Previous release was minus 7,900. The deviation that we are looking for is at least 25,000. Expect to see the effect of this news to last between 1 and 2 hours. Other important things that you should pay attention to is unemployment rate, which is expected to remain at 5.8%. If we don't get a conflict with the employment change, then we will go with our trading plan. We will look to trade this news using our after news retracement trading method. We will wait for the market to retrace after the release and stay out of the market during the release time. If we get a plus 36,600 of release or more, our bias will be to make rise option on the Australian dollar against other currencies. If we get a minus 13,400 or worse, our bias to make full option on the Australian dollar against stronger currencies at this moment. And for sure, if we don't get the deviation number, expect the market to follow the pre-release market trend. UK Bank of England interest rate will be released on March 17. UK interest rate decision will probably not surprise the market because of the recent comments out of Bank of England has been one that is more neutral than hawkish. And considering market reaction to the issue of pre-exit, I would not expect this release to change the long-term direction of the pound unless Bank of England surprises the market by cutting the rate, and it's more likely for sure than increasing the rate. The current interest now is 0.5%, and it was not changed since 2009, as you can see in the chart. So it's forecast at 0.5%. Previous release was 0.5%. So how to trade this news? In the event that Bank of England hikes rate to 0.75%, we will make rise option on the pound immediately, and because of the level of surprise, the trend of the pound will change upwards or stay as it is upwards for the next few weeks. So we can make long-term trades. On the other hand, if we get a surprise of the increase in the ATP, or what's called quantitative easing to 400 billion, it would send a bearish signal to the market, and we should make full option in the pound in the short term. But further stimulus is likely to help the pound in the long run. So if you missed the original full option entry, I would suggest to make rise option on the pound instead at support, at first support. Because with stimulation, I expect the market to go down first, and then with first support, it will change direction upwards. There is also a possibility for the Bank of England to cut the rate to 0.25%, and in this case, we will make full option on the pound. Bank or Canadian core CPI will be released on 18th of March. And at the same time, it will be also released Canadian core retail sales. So we will consider trading both releases if we get the actual release in the same direction. Canadian core CPI is likely a high impact release for Canada, and seeing how much crude oil has been trading since last CPI reading up to 33% increase in oil prices, I would not be surprised to see a strong reading in this release. It's forecast at 0.5%. Previous release was at 0.3%. For this news release, we will make rise option on the Canadian dollar if we get 0.8% or higher, and full option at 0.2% or less. If we get in between number, we will just follow the pre-news trend. For sure, we will use after news retracement method to trade this news. At the same time, Canadian core retail sales will be released at the same time on March 18. A Canadian retail sales figure could be also a catalyst to push the Canadian dollar to next level. But since the release scheduled with CPI, as I told you, and considering recent rebound in crude prices, I would recommend to pay more attention to the CPI number more than the retail sales. But we should not find any conflict between the two numbers. It's forecasted at 0.6%, previous release at minus 1.6%. I'm going to be looking for a deviation around 0.5% of this news, and since the forecast is at 0.6%, a reading of 0.1% would be negative for the pound. And you will be looking to make a full option on the pound. However, if the opposite is true, or at least 1.1% or better is released, I will be looking to make rise option on the Canadian dollar. We will trade this news release again if we don't get conflict with core CPI using after news retracement method. So you should wait for the release, then for the market to spike first, and then wait for a decent retracement before getting in and making your trades. And if we don't get our deviation number, we will just follow the pre-release market condition and sentiment or the pre-release market trend. I want to remind you, you can find instant updates of the news at my resource page on my website, ehabjubail.com. And if you missed the webinar or want to watch it again, you can watch it at binary.com YouTube channel. So then I'd like to thank you for attending today's webinar. We will hold the following webinar next Monday. Goodbye and see you next time.